Right, what's up everyone? So this is more or less just going to be a very quick recap of the trade we ended up taking today. We're not signed in on the broker, so there's going to be no arrows on the screen showing our exact entry and exit. Well, obviously you can see it here with the short setup. This obviously is what we're going to cover after the long that we missed, but essentially we're going to show proof of the telegram here that we did take the trade and call it. Right, so let's get into why we ended up taking this trade here. So basically, as you can see here, or actually if I go on the 5 minute or the 15, from the start of the week here, as you can see, this was CME open on Sunday night. Price has been extremely well, as you can see here, bullish. Price has been more or less drawing towards this high time frame trendline LRO here as buy side, and more or less it's because we have the FOMC event tomorrow where the Federal Reserve will basically be deciding the interest rate. Most people are deciding on the current running forecast is that most people are betting on the Fed pausing rates. Although we're currently in QE, most people are expecting that due to the high inflation and more or less there's no need to continue cutting rates to contribute more to inflation, that people are gonna that the Fed sorry are gonna be pausing interest rates and basically putting a pause on their policy stance. Again, while this is not so much inherently bullish in the short term for risk assets, as obviously there's less borrowing becomes more expensive, there's less stimulus being put into the economy. More or less, it goes to show that um, overall inflation in the long run is um, trying to be brought down at overall less economic long term risk. So really and truly, we've seen basically traders just really accelerating price towards buy side and engineered highs above, with obviously this daily high from last week or the last 2 weeks, sorry, um, being today's more or less drawn liquidity for the long that we missed. But essentially, price had all of this engineered sell side below here that basically didn't get mitigated, or sorry, is yet to be mitigated or rebalanced. Who knows what's going to happen tomorrow or the rest of the week? But again, it went to show that price was extremely overextended, right? And if you know trading, you know that price does one of four things, right? It moves to rebalance equilibrium, moves to rebalance towards inefficiencies, moves to generate liquidity, and moves to hunt liquidity, right? So more or less, we can see the price was extremely overextended here, extremely premiumed, especially for buyers, and more or less just slamming long the last 2 days has essentially been a free trade, right? Oh, sorry, the last day or so. So and through Asia and London of today. So more or less, we knew that price did want to rebalance towards these lower time frame inefficiencies, but again, because it was the day before FOMC, and also we had such a strong move during Asia, we weren't too sure about wanting to bet on such a ramping like high pip trade during New York. So especially when moves like this happen during Asia, more or less, like New York's going to be kind of choppy, especially because a lot of people will probably be waiting for the interest rate decision tomorrow. So let's exactly get into why we took this trade. So more or less, price came up during Asia. Um, as you can see here, price ended up ramping all the way through Asia into the daily gap, and then obviously mitigating a bit of engineered sell side below, souping this low, obviously then giving price the manipulation leg it needed to go and take out this key daily level here from the last 2 weeks. Price basically exactly total souped it, showing key manipulation and a failure to distribute above the high. We also had this hourly SMT here with ES as price extended into this daily high here, with a failure to displace above the high, which kind of showed the price kind of did want to shift low time frame order flow to reverse on unmitigated liquidity. Then also from the manipulation leg down here all the way up to the soup, which was the session high in London, we did have another bearish SMT with ES, which kind of did give us more confluence, and also the price did end up mitigating all of this engineered buy side trendline kind of low resistance liquidity on the manipulation leg. Nice. So then what did we see going into New York? Right. So after we souped the high, failed to displace above it, there was obviously a clear desire for price to shift to low time frame order flow, and the algo obviously wanted to reverse on some of this engineered sell side below and mitigate some of these stops. And essentially, the first draw would have been these equal lows at current session low, which was London's low, as we were trading this going into New York. So we had a soup, two bearish SMTs, manipulation higher above this high here, 3 minute IFVG. We had a 3 minute CISD, and the IFVG was completely strong. We had four 3 minute sell side candles. The four 3 minutes sell candles slamming straight through the IFVG, which was great, showed great momentum. Price traded down, ended up coming back to our entry, but the thing is, inside the inverse for value gap that we had, price ended up making another bearish SMT, which again for us was an absolutely great confluence, and market opened and absolutely slammed through the first draw on liquidity, which was would have been previous session low, which was London's low. These engineered lows here, equal lows at London's low, absolutely great. That was a nice 1 to 4.61 risk to reward. We did play this pretty tight because we did know obviously that tomorrow is the FOMC event. So yeah, overall not a bad trade. But the thing is, what we did end up missing was basically our textbook bread and butter setup. If you've seen our trading strategy video, you would know that basically, if just looking at this long here, you'd know it is pretty textbook for what we wanted. So price basically ended up tagging this 4 hour gap here after being extremely premiumed and overextended for buyers. I've got a 5 minute. So essentially, we had a Judas swinger open. Judas swing being manipulation to take out engineered liquidity above or below price. Great. Manipulated in a bunch of sellers, but also hunted liquidity and took out engineered liquidity below. Rebalanced equilibrium of this leg here, because if I draw this here, you can basically see that from the local low here all the way up to there, which would have been the high of day before the expansion move up. You can see the price did end up tagging back into discount, which was great. Tagged the 4 hour gap here, souped this low here, which is pretty perfect. The reaction of it was great. Also, this did happen inside a 15 minute buy side gap inside the 4 hour PD array, which again was another great confluence. I believe this was a 2 minute play, yeah. So and straight off the soup inside two different high time frame PD arrays. After the Judas swinger open, after tagging discount, we did have a strong, it's immensely strong 2 minute IFVG to the upside, with clear buy side above at the 9:30 wick and also high of day, which was the soup of the daily high during London, which would have been London's high, so previous session's high. And obviously then the 5 minute bearish inversion from the Judas open ended up getting inverted as well, which would have been absolutely great confidence. You could have taken another trade off that with more confidence sized up towards strong buy side above as an external draw. That would have been an absolutely great 1 to 2.89 risk to reward, 93 pips, absolutely killer trade with stop below the inversion candle. So we did miss that because we were posting in the Telegram about our trade, and again we knew that tomorrow is FOMC, so we didn't want to size up too much, didn't want to chase too much. We're happy with the kind of move we caught, but yeah, if you did watch our setup video, you know that this is kind of our bread and butter setup. Ticks a lot of boxes for us, and yeah, overall decent trading day. And with FOMC tomorrow, we suggest you being careful. Price is either going to do one of two things. We're either going to get some big moves during London and Asia, and price is just going to manipulate those as New York opens, and then probably chop until the interest rate decision. Probably see some more volatility across precious metals, or we just see absolutely stagnation, expansion in either direction during AM tomorrow, as futures traders probably just doing more of the betting. But more or less, this one's pretty big, especially because on if you use Polymarket, is more or less a good metric of retail sentiment. You can see that, like, I think it's 90 or 99% of retail are betting on a pause in federal fund rates. So yeah, that should be interesting. But yeah, overall not a bad trading day. 55 pips quarter open, I believe 50 pips, sorry. 1 to 4.61 risk to reward, can't complain. Yeah, if you enjoyed the video, be sure to subscribe, like it, and share it. Again, YouTube doesn't let us put the link to our free Telegram in the description. So if you do want to, join that, where obviously we talk everything to do with crypto, futures, macroeconomics, absolutely everything. We put all our call outs in there, a whole bunch of different viewpoints and discussions. Then yeah, be sure to comment the word join. We'll send you the link. But yeah, other than that, take care and thank you for watching.
See you in the next episode. Magnus out.